Welcome to Stephen Johnson's Stocks. Same t-shirt, visibly more hungover, which was interesting. There's something I'll talk about at the end of the video about this. Something I've kind of learned as I'm growing older. But I just want to quickly say before getting the trades, I'm up about 1,200 bucks, 1,100 bucks. Made only 100 and something this week. EYPT, I was just a little bit early on it. It cost us a few hundred. But otherwise, a green week, all good. Let's get into the Excel. A quiet week this week. I mean, just to run you through the trades, that was a very nice win, DXR. But I mean, I had a tiny little short. Cutting loss is very nice. I took it long, very short loss. Little loss, LNW. Took it short, bit of a bigger loss than necessary. Again, very tiny Twitter short, a nice little gap and crap on EVLV, took a couple of hundred. Tiny cutting losses, very tight, $12. And then there's a couple more to come in. 193 loss on EYPT, which you'll see, and a $30 loss. So very rarely winning. I mean, I've won 3 out of 10 here, which is 30% win rate. But I still managed to close green on the week by... where am I? By 129 bucks. And it's because me winners are obviously bigger than me losers. I'm winning 30% of the time, losing 70% of the time. The market's really not good. I'm not seeing the patterns right now, but I'm cutting losses tight to protect myself. And in general, I overtraded heavily at the start of the month. And my win rate is really low, like 49%. It's the lowest it's been since July. But I'm still profitable because I'm cutting losses tight. Me winners, I'm letting them run. And really, I mean, 10 trades in 5 days is like 2 trades a day when I'm sometimes taking 3, 4, 5. I'm really trying to scale back now. For example, Friday, I'm taking it off. I'm going to a pool party. So not much to report, but still hanging in there, still doing reasonably well, still up 1,200. But in this kind of market, you've really just got to wait, and if the right opportunity comes, try and increase your size a bit. If you're random trading, trade a bit smaller and cut your losses fast. Welcome to the whole screen of stocks to trade. Normally I don't do this because we've got a tip at the bottom and a lesson at the top, but I want to kind of take you through some Excel stuff as well, so I've deliberately shown you the full screen. Now, to give you some kind of background, there was only one good play this week, and this is it. It's interesting just to show you how I set up my days. So I have stocks that run one day, which is like ECYT on its first day, and then if they run a second day, then I'd put it in day 2 and then day 3. Then I can track stocks gapping up, running 2 days in a row, 3 days in a row, 4 days in a row, and it's very easy to follow patterns like how do stocks fail up 2 days, how do stocks fail up 3 days, what stocks are most likely to come down. It's just a practical way of organizing your watch list. But I was looking at ECYT and I'm thinking this is generally when stocks go up 1 or 2 days, it has a red day, and you can bank on it. For example, EYPT, 2 green days, red day. 3 green days, 2 red days, 2 green days. I was thinking this would be a red day, and this is not purely on the fact of EYPT. It's also because I have a lot of data to track and back up this. So I mean, and I'm selling this for 50 bucks, and I keep on saying that I'm going to stop selling it for 50 bucks, and I genuinely am. But I'm thinking about 2 different offers. One, I either give people an hour of my time and talk them through it, the spreadsheet, and sell it, or I make another PowerPoint, a full deck of like written analysis of all of the patterns and all of the findings. I'm figuring out which one to do because both are going to cost me time and I don't have much. But there's hundreds of gap bars, loads of data. This is gap and crap. This is gap downs, loads of data. And then that's my third short pattern, the big gap fail, which I've just started. So I've got 3 solid patterns, all with 85% win rates. Trouble is the market's a bit quiet right now, so there's not many. And because there's not many, I took EYPT and I took it on its second green day. So let's look at the kind of the probability based on the track data. And the market's a bit quiet, so we've got about a sample of like nearly 50, which is pretty good. Like 50 gives a pretty clear results, I think, 50 stocks. And the 50 stocks have basically had a run of 1, 2, 3 green days, then they've gapped down. And as soon as they gap down, whether they run or they fail, I always track what they did and how they did it. So, first of all, I mean, we're looking at first gap down, it failed on its second day. So this is EYPT, keep on saying it wrong. Ran 2 days and then it gapped down because it opened in the 220s. So this immediately falls into this category, first gap down, day 2. And I know that, I mean, generally, like say 40, 50, 63, I'm just adding these percentages together. 40% run from red to green and then they ultimately fail. They don't end up like running at the highs. 23% fail and just go straight down red and have a big day of more than 5% red from the open. And 7% like have a small red day less than 5%, where 23% actually go red to green and probably run. So I was shorting on the red green because that 40% fail roundabout red green. They go up or down 2%, 1%, and then they fail. And I was basically, it looks pretty strong on fives. Like first day perked, held its highs. Second day perked, cracked, but again held its highs around this double top. And then on the third day, I was shorting it a little bit, yeah, and I was going to risk previous day resistance around 246 because we can see that that's kind of the breakout, and if it gets above the breakout, if the second day, it's going to squeeze. And when you look at the probabilities, it's not very likely that this happens. I mean, for me, if you just look at the float, it's like a 50 million float. If we look at the volume, I mean, it's trading like 5 million volume, a small percentage of its float, but I mean the volume is quite big in comparison. But still, I would trust me data at this point and say that 40, 50, 63, around 70% of the stocks up on the second day, they're not going to get past red green, so they should come back down. Unfortunately, 1 out of 4 times pretty much they will run red to green and run, and this was one of the 1 in 4 times you play in probability. 75% of the time you're going to win, 25% of the time you're going to lose. This stock is at multi-year highs, and this was one of the times where I'm going to lose. And coupled with bad luck, I was at Barassi, those of you who follow me on Instagram, and basically the internet cut out when it was like 242, 241 around this area. And I'm deliberately, by the way, guys, I'm not showing you these like close-up intraday charts because it's very important to be able to look at a 5-minute time frame over 3 days to see exactly where the previous resistance is, understand this double top, understand like how it had no kind of weakness and it's very strong here, it's closing very strong here, it's held its highs despite the fact that it cracked here. These are all very bullish signs, and it's good to think you should probably cut here, and especially when it bottoms on the previous day support and rips again, that's a very bullish sign. But for me, it's not a long because it's up 2 days in a row, and this is its third potential up day. And it's already gapped down, which is showing weakness. So it's not a long. If anything, it's a short. And it's just one of those things that you're shorting it around the two. Say, for example, you're shorting it around red-green. It opened around 227. Say it goes up to about the 238s. You're risking off 250. So you're giving about 10, 12 cents of risk for it to potentially, I mean, you're hoping for a move back down to the maybe around the 2s, the 190s. You're risking about, say, 10 cents, 12 cents to make like 30 cents. So you've got 3 to 1 risk reward. And if you look at the probabilities, it happens 75% of the time. So 3 to 1 risk reward, 75% likelihood. It's a good pattern to play. On this occasion, it ripped and broke out. I've lost internet connection, and luckily for me, I got away with it this time. It came back down, and I was covering into this weakness back around the 240s. So should have coulda, woulda been a $300, $400 loss, which would have put us still flat on the week and very much over a grind up on the month. But some good lessons. I mean, first of all, stick to shorting stocks up maybe 3 days or up over 40, up 50% on the day, because if they're up 3 days or more, they've only got a 12%, 12.5% chance of running red green on you. But much better idea to say short EYPT today, for example, or to short it on Friday. So you guys are watching this on Saturday, so what did EYPT do yesterday? Because it's only got a 12% chance of running, the likelihood is it's going to have a small red day or a big red day. I was might have been a bit of a day early, but I would probably play this pattern again. But just to be safe, I'd be playing it maybe in the 240s, 242s to only risk 10 cents in case it breaks through. Yeah, and I just want to close by saying, for me, just again, I started this journey because I just got sick of drinking, sick of partying. I didn't find fulfillment out of this hedonistic lifestyle that I was living, and it was hedonistic. Waking up in random beds of different girls, going out all the time. Just felt lonely, if anything, after a period of time. Fun at first, lonely at the end. I was looking for something more meaningful, and this dream is real. The dream is possible. Some people pick it up in 3 months, some people pick it up in a year, some people pick it up in 3 years. Some people become a millionaire like ducks in 1 year, some people take 5, 6, 7 years like Mark Crook. And especially if you're part time, like my first year, I didn't really see the market. You've got to see the market every day. I'll see it as much as you possibly can. Make sure you're recapping on what's going on in the market every single day and looking for patterns. Check out the Steady Trade Michael Good podcast. It should be out next week. It's there's some great insights of how to find an edge in the market towards the end. Live the dream.